I mean, typically you're always looking at the same similar factors. Money inflows, right? I mean, money is what drives prices. So that can be other investment from corporations, technology, municipalities, other investors, anywhere that's attracting capital and jobs, and that there is a greater demand for property than what exists there on the market.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, Joe Roberts on with us now. You find him at robertventures.com. And even in this crazy environment, Joe, you are still finding things to invest in. First, tell us your investment perspective, the economy, and what you're doing.
All right. Well, I think like most investors in this time period, we're all trying to guess where the world is going to go. And if we all could predict the future, we'd probably all be a lot richer. But we at least have to make some best assumptions with our portfolio. So what am I currently doing? We invest in two different areas. One being on the real estate side for now 20 years. So we're actually have relationships in acquiring properties over in the Outer Banks of North Carolina. And this is a area that has a lack of supply of any new homes coming on the market. So we're targeting price points under $700,000. We're acquiring lots and we're building spec homes and then going to the market with those. I think, what I'm trying to say is there, if you're looking at any market across the US right now, you need to understand the supply and the demand dynamics and understand the price points in which majority of the buyers are able to come in and where it is affordable based on where the interest rates are today. And so therefore, this market works for us. And so we've been acquiring lots there and we're building new homes.
Okay, so rates. Obviously, rates are important. Do you expect rates to stay where they are, go down, or go up? What's your perspective there?
Try to take a little bit of contrarian bets. Everyone over last year keeps saying that rates are going to go down pretty quick, and it kind of hasn't happened. So I'm going to take the other side and say that I think rates are going to stay, let's call it elevated or at these levels longer than people anticipate, because I think there's still a lot of liquidity in the system, and therefore there still could be inflation pressures for the foreseeable future. Okay,
so but basically, rates are close to what their historical norm. We got spoiled with 0% interest and less than 3% mortgages and all that. But really 5% interest rate, 6-7% mortgage has been the norm for the past, with notable exceptions, for the past 40, 50 years.
Correct. And I think, looking out over the next year or so, based on what's happening today in the market, we're actually seeing maybe what may appear to be a soft landing. Now, things can definitely change overnight with anything happening globally, but things are slowing down in the economy and may get slower over the next 12 months. But I think unless things get drastically bad, I think they might not need to lower those interest rates. And like you're saying, basically keep them at more normal levels moving forward, at least for a while.
Okay, I'll buy that. And so if this is the new norm, what other opportunities besides, I guess, lower cost real estate? $700,000 is low cost in this day and age, right?
Yeah, I mean, I guess it definitely depends on your jurisdiction, but almost, the 500,000, I wouldn't say $500,000 price point is starting to become quite an average purchase price in a lot of different areas. And I think, the other areas that has lower cost, maybe like Huntsville, Alabama and so forth, where obviously it's dramatically lower, will increase over the next decade. And that may be great areas to look at because of the cost to build.
Okay. So you like Huntsville. What other markets? So these are markets in the South, landlord-friendly jurisdictions, we would call them, growing areas, because pretty much everything in the South is growing, lower cost, lower tax. What else attracts you to these areas?
I mean, typically you're always looking at the same similar factors. Money inflows, right? I mean, money is what drives prices. So that can be other investment from corporations, technology, municipalities, other investors, anywhere that's attracting capital and jobs, and that there is a greater demand for property than what exists there on the market.
Okay, so supply demand fundamentals. So you're not investing in New York State or Illinois or California for obvious reasons.
Correct. And then, obviously there's experts in New York that focus on those markets, but for the general investor, it's much easier to invest in areas where you can get things done a lot quicker with the local governments, building permits and so forth. It keeps your costs down.
Okay, so cost, no unionization, anything else we're looking at?
I mean, I think the average salary of the jobs being placed in that area is pretty important, right? Like I said, kind of following that money. If the certain corporations are putting headquarters there or data centers and they're attracting high salary, six-figure jobs, that's going to, at some point, reflect on the average median income and household price in that market.
All right. Which is totally logical. I mean, look, there was just an article out. New York City lost 5.3% of its population, nearly 500,000 people in the past 2 years. You want to go where those people are moving to, right?
We want to go to where those people are moving to. We want to go where there's talent, there's universities, other people want to live, and then where the other, call them Fortune 500s or other larger corporations are willing to set up shop in their businesses, other headquarters.
Right. So what about office buildings? Obviously, you're not investing in them. Do you have a feeling about where they're heading and any uses for them? Because you could pick them up really cheap now in a lot of places.
I think like most cycles, what will probably happen is, call it over the next 3 to 7 years, you'll see a lot of buildings come to market, greatly discounted because of the remote work that's occurring. And therefore, they'll sell at a deep discount because the CapEx or TIs will be too great to get new tenants in there. And so they'll be sold at a great discount. No new office construction will occur, or there'll be limited new construction that will occur in that sector for 5 or 10 years. And then maybe, depending on the area, 10 to 15 years out, it'll kind of catch back up with demand because of lack of construction. I think that'll it may present an opportunity for office long term in certain areas, not every area.
Okay, so all right. So the opportunity. What about the retail space? The trend there has been pretty abysmal, but in certain states, like in Florida, retail is doing great.
Retail in Florida, I mean, that's a heavy car state, right? And there's a lot of local shops, when you talk about the barber, anything that you basically, when you have retail and you are talking about any business that doesn't get affected by Amazon or rely on Amazon, like your haircut, your wash, your alcohol you might pick up and so forth, they're going to need retail space. And especially in Florida, they're willing to drive and pick that up.
You still can't get a haircut on Amazon. Maybe they'll get a Edward Scissorhands app. You'll be able to do that one day. But for now, and yes, you can buy groceries and stuff over the web. But, it's still the kind of thing people generally, if you're buying shampoo, easy to buy from Amazon, or bathroom cleaner. But when you're buying food that you're putting into your body and your family's bodies, you're not necessarily going to go for that.
Correct. And I think two sides. One, there's always a group of people that will always probably exist that when they go to the store, they want to pick out their meats, they want to pick out their fish, they want to pick out their fruit, and they're very picky on that, what color that banana looks like. And they love going to the store because that's part of their, weekly thing. And I think there's always a group of those people. And also just casually browsing Amazon, you'll see that a lot of these little products are definitely trending up in price compared to in store. And I think as more people realize that, or may get budget friendly over the next year, as things slow down, they might actually be starting to buy more of these things back in store if they're cheaper than Amazon.
Right. So cheaper and convenience counts for something. You know, a lot of places Amazon will deliver same day, but a lot of things they can't deliver same day. Takes 2 or 3 days. You know, if you're out of toilet paper, you're not going to wait for Amazon to deliver it in 2 or 3 days, right?
Correct. And not, like I was mentioning, like sometimes right now you go on there and find a case of tissues, but they're charging $5, where maybe you go up to Target, you get that for $1.99 each. And really, because they have to bake in the shipping and everything else and the convenience. And now I think they've kind of realized that some people are willing to pay that premium, so they're charging more online.
Right. So one other area you mentioned pre-call was Web3. Can you first tell us what Web3 is and why you think it's so desirable to invest in now?
Well, I've been investing there for about 5.5 years. Web3, is really, I like to make it very easy to understand. It's just kind of the next software evolution that is bringing more transactions on a peer-to-peer basis, where you can interact and do transactions with other individuals, removing other large corporation intermediaries or governments within that transaction. I think why we're focused there now is because most people are not focused there, right? And I've learned over my investing career that the best deals to be had, or best times to acquire, are when the people think that the sector or industry is not great to invest in. And based on a lot of the over-leveraged companies that existed over the last year that blew up, I think that has scared a lot of people away. And, now is kind of creating an opportunity to do your, what we call dollar cost averaging, or buy your blue chip like assets that you think will be the infrastructure or the settlement layers of transactions for the future digital economy.
Some examples.
Well, I think the top two examples everyone always mentions is Bitcoin and Ethereum. When it comes to Ethereum, a lot of people think that there is a great possibility. Now, everything's still in its early stage, so there's no guarantees, but there's a great possibility that a lot of financial transactions can settle on the Ethereum blockchain in the future as a settlement layer.
Okay. I'll buy it. What do you think of FedNow and its impact on all digital assets?
I haven't done enough study into it to fully understand that much about it. I think it's maybe a little bit more noise and not to be too concerning. I think kind of the difference here between digital assets, or let's say like Bitcoin, is the decentralized thesis behind it and the ability to send payments from your own wallet to somebody across the world without that government agency having to approve it, to where you get into these, central bank digital currencies or the FedNow system, that could always be gated, and they could always make those decisions on where and how you spend your money.
Okay. Well, I think, I'm just reminded of a bumper sticker on a car I once saw, and it said, "Don't steal, the government hates competition." And the best way they steal is through, most effective ever known to man, is through inflation. Are they going to put up with competition here?
I think that's what's happening right now. And this part of every adoption cycle, there's different phases it goes through. And right now, they're trying to reject it. And by putting up a lot of these laws or proposals, we'll call it, to call things securities, or proposals for taxes, or Biden's campaign to kind of talk about crypto people. But I think at the end of the day, 5 or 10 years, it's going to happen in some capacity. And short term, it's probably a lot of noise why they try to prevent certain things that happen. But I think because of the global phenomenon, I don't think it's going to be stopped by any means. And I think it's going to be real important to see how this plays out in the next couple of years with the election, and kind of how that transition goes and who comes in.
All right. I have my own opinion about it, but I think it's too early to know. But one thing I know about the government is you can always count on them to screw everything up and to kill the party, to piss on your parade, if you will.
Yeah. But like China, they banned crypto, Bitcoin mining, and everything over the last 5 years, 7 years, call it, multiple times, different times. And so I think we kind of could be going a little bit through that phase right now where the government's trying to stop a lot of the activity for their own agenda. But at the end of the day, like I said, it could be a change of election or whatever. In a couple of years, it could go the other direction. But I think if we're looking at a long 5-10 year horizon, there's going to be a lot of this that will be adopted in today's financial community.
All right. I guess we're going to have to find out. But look, if possession with intent to distribute Bitcoin or other crypto will land you 5 to 10 years in jail, I wonder how many people are still going to be doing it, but that remains to be seen. That's really the question here. I don't have the answer to it. Hey, Joe, appreciate you coming on. Hey, any other investment sectors that you're keeping an eye on now that you're maybe not putting money into?
Just one that's kind of been on my mind, we'll call it, let's say, and it's kind of a broad range, and you'll probably see a lot of the activity on Twitter, but I would definitely say through the SMB space, I think being able to utilize this next decade, we'll call it, being able to utilize technology, AI, Zapier, no-code applications, and applying these to businesses, making them more efficient, removing some of the overhead of the labor and those annual salaries, or offshoring part of that labor and reducing costs and increasing sales is a great opportunity, whether it's a startup or you're going out and acquiring these businesses where there are older generations running them and they're typically not willing to learn all the new tools and they're just kind of chugging along, waiting for someone to come and buy them.
All right. How do you find that business, by the way? That's what I'm putting down. You put it in the paper looking for company that's profitable or marginally profitable and has old style management with a resistance to change and the newest technology. I don't think that ad's going to get you a lot of attention.
Well, I think like everything, you got to go. So, some things could just be Google, right? Are they on Google or are they not? A lot of these databases of these companies that receive the PPP money, there's databases out there that you kind of aggregate this information because it's public knowledge. And you can start from there in certain sectors and, make a curated list and then go out there and look at the Google and see, do they have a website? What's the last time they updated the website? Is it just original 10-year, done 10 years ago? They haven't done any updates. What are the reviews? Are they even managing the reviews? I think that's a great place to start. And then from there, I would try to do outreach to those owners.
Hey, my dry cleaner is a perfect target for this because they use paper tickets.
I know.
They don't use, everything is like in alphabetical order. They don't use like barcodes. Like I went to a dry cleaner in one place, they put these little mini barcodes on my clothes, never had another ticket on there, another tag, they put through the buttonholes. So maybe my dry cleaner is a good place to start here.
That is a great one because even when you go there, we got the paper too, and when they're done, if they head in the computer, it should go around the line and it should scan it. It should send you a text message automatically when it's done, and you got to kind of guess. You got to call. Is it ready? So yeah, there's a lot of things like that technology has come so far, but there's probably still a lot of room where we could implement this into all the businesses that exist out there.
And that is a perfect example. Like none of the dry cleaners that I go to, they don't send me text messages saying, pick up your clothes. And effectively, when they have hanging clothes in the dry cleaner, it's inventory, right? It's basically inventory. It's services which have been rendered but not yet paid for. And just to pick up your cash flow by bugging people, first you send them one, then 3 days, then 2 days more, then boom, 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 you're sending them one every day. And it's all right already, I'll pick it up. And that's cash in the bank, right?
Yeah, I agree. And so, look, like, my dad had a dental instrument business and They were making enough money every year that it didn't impact them to have to grow any bigger. And so there was no desire to learn this new technology or to get better at online marketing. And so I think, finding these types of owners are a lot of them out there, and they're great potential sellers, or possibly, buying majority of the equity and keeping them on for a certain time as you transition that business and utilize their expertise.
All right. I love it, Joe. I think that is a great thing. And if you're young, a lot of times these smaller companies, they need to have a generational shift. Health isn't good. They want to retire, and they're not going to be financeable, especially with the state of regional banks now who made a lot of these loans. So you get owner financing, you put down 10%, 10% cash, you cash them out, you give them an earn out, and then you proceed to build the business. Easier to do that than it is to go start your own new business, which is very costly in terms of time, in terms of resources, and in terms of building systems from the ground up where, hey, my dry cleaner's got a lousy system, but it is a system, and then I just upgrade his system instead of having to build one from the ground up, or move 3 doors down from him, start my own dry cleaner, and then I got to take market share away, right?
Yeah, and then once you acquire one dry cleaner and you have the experience and you put all the systems in place for one and it's automated, I mean, then the next year you can move on to a second and so forth. And maybe after a decade, you roll up 10 or 20 of these and then you sell that to a PE group at a higher multiple. And that's, the way to make real wealth over the next decade.
All right. After we get off the wire here, I'm going over to my dry cleaner. I'm going to make him an offer. All right, Joe. Hey, appreciate it. So again, just tell us your website, where we find you.
Yeah, at robertventures.com. And thank you, everybody, for joining us today.
Okay. And the link is in the show notes to this interview on financialsurvivalnetwork.com. Just click it. It'll take you right over there. While you're at the site, please sign up for your free newsletter. Joe, really appreciate you coming on. We'll talk to you again real soon.
Thank you, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.